Ladies and gentlemen, welcome to our AMAS webinar on operationalizing T+1, which we have organized together with ValueExchange. On February 15th of this year, the US Securities and Exchange Commission SEC adopted amendments to their Rule 15c6-1. T+1 is already scheduled to come into force in less than 1 year, so firms around the world have intensified their efforts to implement this new regulation to accelerate settlement of US and Canadian trades in their operations, as well as affected processes and internal controls. Currently, the scheduled compliance date for the new settlement regime is May 28th of 2024, but the asset management industry is advocating for a post-Labor Day implementation date of September 3rd. However, a successful transition to T+1 will require immediate technological, behavioral, and operational changes. You will also have the opportunity to ask questions. Please use the Q&A function below the screen. In German, it is the F&A button. Now, we are very excited to hear insights from our two speakers from the ValueExchange, Martin Kunz, who is present locally in Zurich, and Barnaby Nelson, who is joining us directly from their Canadian hub. Gentlemen, the stage is yours.
Thank you very much indeed. Firstly, thank you, AMAS, for hosting this event. Thank you to all the participants for taking the time to allow us to share our findings and our insights, which we hope you will find of interest and will trigger some thoughts and changes for yourselves. We start today, as introduced, with the US and Canada. We do know that the UK has launched a review a few months ago to see if the UK can benefit from the implementation of T1. We have heard earlier this week, Australia has launched a market review and feasibility if Australia can adopt T1. We, through the ValueExchange, have also been in dialogue with Mexico, with Korea, Hong Kong, South Africa. So the objective of T1, which is really focusing on the reduction of counterparty credit risk, freeing up of capital, and improving the liquidity of the market, is clearly a subject way beyond the US and Canada. It is spreading across the globe, and I think it is probably fair to say, should we see, or when we see the successful implementation in the US, that the rest of the world will probably follow fairly quickly. So the work we have undertaken to prepare for this afternoon's show is very much user-based. It's data analytics, which I will leave to Barnaby Nelson. As mentioned, he's based in Canada. So thanks for joining us early, and I'll pass over to you, Barney. Thank you.
Thanks, Martin. So yeah, I mean, what we're going to do is run through some statistical findings, as Martin says, that basically recap on exactly what the impact of T+1 is really on the ecosystem. So to a degree, the investor, but also obviously your service providers in terms of brokers and custodians, most of which is kind of cumulative information that's built up through the course of this year, beginning as Stefan said, in February with the SEC's announcement, but obviously through many discussions all the way up to now. So, excuse me. So what I'm going to do is just walk us through some of the research findings. But I think, as we said at the beginning, your questions are certainly going to be very, very welcome on this, because this is very much a moving target. I think I would probably, most importantly, open by saying that the biggest mistake that anyone can make is thinking that everyone else is ready and they're the only ones who are not paying attention. For me, the value of these sessions is to be able to actually to share information and to be able to get all of your questions answered. So please do, as Stefan says, use the Q&A, F&A function, and then we can talk more at the end in terms of questions and answers. So to basically to walk through essentially what we're talking about here, what I'm walking through is ultimately, as I said, is some statistical findings that have been built up from our T+1 database that have been largely run in cooperation with a lot of industry associations, And it's very much centered on the US and the Canadian perspective, the US and Canadian move to T+1 from a global perspective. So as you can see, we've done a lot of work with DTCC and TMX, but also from a European perspective, AFME have been an integral part of all of our research to try to make sure that the European perspective comes through. And the reason why that's important is ultimately because one of the major data points is that when we look at the move to T+1 in the US and Canada, which, as Stefan says, is scheduled for May the 27th in Canada 2024 and May the 28th in the US, so one day apart, the impact of T+1 is actually going to be most felt ultimately by you. If this group is, broadly speaking, is a collection of Swiss investors and asset managers, then ultimately, as you can see, you and your custodians are basically the most impacted by this move. So it's not, so even though this is a change happening in the US and Canada, what's really important is ultimately is that it's not the Americans and the Canadians who are most impacted by this. It's actually very much people in the European zone and to a degree in the Asian zone as well. Why is that? Ultimately, I'll expand on in a minute, but obviously, for Americans and Canadians, T+1 is, or a settlement is domestic currency, single time zone. Whereas obviously where you're sitting, it is a multi-currency and multi-time zone challenge that you're now going to have to actually manage your settlements at 2 o'clock or 3 o'clock in the morning. And so, there's no great surprise that ultimately that you guys are impacted. But I think that this is very much reflective of the fact that the conversation around T+1 at the moment is actually really centering in Europe. I don't know if you guys are feeling it, but actually the increasing consensus from people in North America now is we've done what we need to do. We're kind of ready. But ultimately, I think Europe and Asia now is basically the center of attention in terms of preparation and work going on. Now, in terms of the impact of T+1, I suppose maybe just to recap ultimately on what we're talking about. First of all, T+1 in the US basically means a move to allocate trades by 7 p.m. Eastern Standard Time on T0. So that's basically what's that? Anyway, it's 7. Well, depending on the time of year, you're either talking about, I guess, midnight or 1 a.m. Local time CET. That then needs to be followed by a broker confirmation by 9 p.m. And then basically all of the affirmations managed by midnight Eastern Standard Time. So effectively, all of the work has to be done in the middle office by the end of T0. In Canada, it's slightly different. There is essentially there is no mandated equivalent from the SEC in Canada. There's a working best practice that's saying all processes in terms of trades being entered into the system for settlement, so having been allocated, confirmed, and entered into the CDS system, need to be done by 3:45 a.m. Again, Eastern Standard Time. So really, I say that because there are some very, very clear timings, all of which begin in the middle office ultimately. The key point is that basically T+1 for the US and Canada can only succeed when the middle office is allocating on T0. And certainly, as I said, around the end of the European day, the allocations need to be made so that basically the custodians can do their work over, the remaining hours of T0. And what the reason why we always put this slide up is because ultimately, as I'm sure many of you would be very familiar with, just because ultimately the allocation goes in doesn't mean that ultimately that the whole thing works smoothly. So, for me, the areas that are impacted by T1, what do we need to change? First of all, as I said, fundamentally, it's the allocation happening on T0, but equally the trade has to be funded. As you can see from an investor perspective, the funding in FX is a fundamentally big question that I'll come on to. Then obviously settlement, it's the settlement person who's going to be screaming if this doesn't work. But then very importantly also all of the securities lending, whether that be recalls, whether that be fails coverage, the sec lending team on any desk, whether that be an agent lender for an investor who's lending out securities, or obviously a broker who's arranging the borrows. Ultimately, that's also a key area of impact for T+1. And last of all, corporate actions is, fundamentally is very important, not only from a static data perspective, but there are also certain rule changes. So for me, what's very important about T1, is that ultimately it begins on success and failure begins on T0. But ultimately, success also depends on 5 or 6 or 7 different teams within the organization, different functions within the organization being represented and taken care of. So this isn't just a middle office issue, nor is it just a settlements issue. Success will come from a real team effort. Now, the real challenge that we face around T+1 is basically attention. Now, these statistics are taken from March, so hopefully they've moved a little bit. But the real problem is basically is that really the number of people, particularly in Europe and in APAC, who are still not really actually going through their preparations to make sure that they're okay for T+1. Is the quantity of those people is very high. So 40% when we did our research survey had not even really started basically taking any kind of serious steps towards T+1. More concerning than that is the fact that 60%, as you can see in the box on the right, of fund managers and investors were still in their very, very early stages of researching and scoping. So the challenge really is that a lot of this begins and it fails, even before we get to the allocation, it begins and fails by just paying attention. And I think, if you look at the way the conversation has played out over the last few months, I think it's pretty safe to say that the biggest question that we've had from most investors around Europe and Asia is, first of all, why do I need to do anything? There's no regulatory compulsion for anyone in Europe and Asia to allocate on T0. Could your custodian or your broker absorb the pressure of your sending through something very late on T or very early on T+1? Possibly, but at the end of the day, doing that creates systemic risks of not just your trades failing, but other trades failing. And it also obviously creates the question of, are you absolutely sure that your broker and custodian will put you at the front of the queue when things are under pressure? So the obvious advice is just making sure that, to everyone, is to make sure that, you are allocating as quickly as possible, certainly on T, in a way that is very standardized, very STP, very robust, so not emails, and that ultimately, therefore, is going to be easily managed by your brokers and custodians. For me, this slide is very concerning in terms of the number of people who haven't even really started thinking about it. And for me, I would qualify thinking about it as, do you know that you're going to be okay? As in, have you worked through the scenarios and testing with your broker, your custodian, to make sure that you're okay? So we strongly hope that these numbers are going to start going up, but at the moment, the key point really is kind of pay attention first of all. Now, one of the challenges ultimately with T+1 is, as a result of the people not really necessarily paying a great deal of attention, Stefan mentioned in his introduction, the strong desire to see this moved out as far, towards Labor Day if possible. And when we first launched our survey, I think the expectation before the SEC's announcement was very much that we would not see an implementation before Labor Day. And so the March implementation has kind of the May implementation date has kind of surprised many people. I would say that there's very, very, very low likelihood of a delay, and the reason I say that is, as much as we would like it to be delayed, the key point is that there is no framework or evaluation process in order to trigger a delay. So there is no go or no-go moment or process in the US or Canada to evaluate readiness for T+1. So that for me is very fundamental, because it's the question we get asked the most. But I really do underline that, because ultimately it scores the point that we cannot be expecting anything other than a continuation of the May date. The reasons for the May transition are, I think, from the SEC are fairly strong, in terms of there's a very strong belief that the systemic risk that exists in the US market because of the 2-day settlement cycle needs to be removed after the GameStop crisis. And so, you know, I strongly believe, based on all the information that we've been given and conversations we've had, that there won't be a delay. So best not to assume that there will be, and keep on working for the May 27th, 28th deadlines. Now, you know, I think that one of the points, just the you know, not to carry on about the engagement, but I think one of the challenges of don't know, of people not being ready, is ultimately at the moment, or certainly through the second quarter of this year, we've seen many people basically saying that they just don't really know what's going to happen with their T1 plans. And the problem with that is that obviously that we move forward as an ecosystem. And so if you don't know what your T1 plans are, it's very hard for the brokers and custodians to plan. It's very hard for consultancies, everyone to plan. So one of the biggest blockages that we see emerging through the second half of this year is basically a shortage of resource. So where you do have any changes made or needing to be made across your infrastructure, if 40% of the market suddenly begin to engage in the second half of the year, there won't be enough consultants and technology vendors to be able to help you, you know, because people are already, you know, reaching stages of being fully committed in terms of bandwidth and resources. So if you do realize that you need to get, you know, one of the consultants or the system integrators or your software vendor to come in and help, you know, I think the later you leave it, obviously, the less likely that they're actually going to be available to help you. So, you know, for me, at the risk of kind of sounding alarmist, you know, the key point really is we need to be moving into project mode as quickly as we can. The other reason why moving into project mode is so important is because testing begins in the US in August through to December, and then in Canada from January next year onwards. So, you know, most people really need to be actually starting not to work out what they're going to do, but ultimately how they're testing what they've done through the second half of the year, so that obviously any remedial actions can be taken once they've spotted. So I think in terms of areas of impact, why is this a problem? What should you be looking for in your organization? I mean, I think realistically, the impact of, as I said at the beginning, the impact of T+1 is most strongly felt within the European and Asian time zones. Reasons for that, as I said, really FX and the time zone challenge. So as you can see here, the delivery of a cash security, whether it be an equity or a bond, is most problematic in Europe, really because of the two areas I've mentioned, plus securities lending. Interestingly, more as an FYI, given the nature of this call, in Asia, it's actually more around fund structures. So basically collective investment schemes, challenges with NAVs, challenges with liquidity, because obviously, given the time zone differences, really T+1 in America is effectively going to have to be handled as a T0 settlement in Asia going forward. So, you know, there's intense pressures being felt in Asia and anyone running an Asian desk. Now, in terms of why are we going to struggle? You know, I think, you know, it's easy to overcomplicate T+1 readiness, because ultimately, for me, really what this is about is manual tasks. You know, the amount of manual processes that support the entire investment in a US or a Canadian security, from basically from allocation all the way through to confirmed settlement. You know, if you have any, you know, then those are the things that are obviously going to be stressed when you have to move twice as fast. So, you know, what we tend to find in this current reliance on manual tasks is, you know, if you break down what that means, ultimately, first of all, it means that important trade data, as I said, either an allocation confirmation or settlement information is being sent by non-standardized messaging formats in non-standardized or non-robust mechanisms. So emails, FTP servers, that kind of thing. So if you're doing anything that's not entirely standardized, then ultimately you're creating a blockage, if you like, for your brokers and custodians. The second point really is ultimately within the manual tasks. It also includes all of the remediation work around the settlement. So why does a trade fail today? Generally speaking, I think it's only, if I understand right, it's only about a third of trades fail because of an absence of the securities. I think the number 1 and 2, generally speaking, are that either the SSI data is wrong or the counterparty, the settlement instruction is wrong. So, for me, as I said, it's easy to overcomplicate T+1. For me, the simplest thing is basically for anyone, you can see the error queue that you have every day, and you can ask your custodian for the same information, but ultimately, where are your trades actually failing to match at a settlements basis today? Who are the counterparties that are systematically wrong? Where have you got bad SSI data in your systems? For me, it's very easy to get information on basically what's creating errors and delays in your processes today. They're the natural starting point for where we should be looking at in the next 6 months in terms of automating processes and resolving data issues. So, for me, this reliance on manual tasks is very key. I think this other point about reliance on market providers and market structure, this generally, as you can see on the right hand side, relates more to the platforms, so to FX, securities lending, valuations, areas where effectively there is a network platform like an Equilend, a Pyram, an FXall, somebody like that. And I think there is an external dependency there, but I think one of the things that we've consistently found is that there's a tendency to overestimate people's reliance on third parties and underestimate what they can get done inside their shop. So, for me, the strong guidance is basically look for the manual processes, non-standardized, non-robust communications, and look at what's triggering your error queues at the moment as two very easy places to start in terms of T+1 readiness. I think one of the challenges that I think we talk a lot about external challenges with T+1 in terms of some of the big issues that are floating around, and as I said, tending to rely or trying to shift the reliance onto other people in terms of, well, it's my custodian who's got to fix this, or my AFX provider's got to fix this. But the reason why we put this slide up is what it really says is basically is the biggest problems we have across the industry are actually inside the organization, not outside. So it's very non-sexy, very basic, but ultimately why are we going to struggle, or why are we struggling? We have complete clarity now on implementation dates. So the first one is no longer, this was from February, but the key point is ultimately it's about change management. Can we get hold of the right resources? Can we prioritize funding for T+1 over and above other important regulatory mandatory changes around any overhangs from SFTR, EMIR, all the MiFID refits, EMIR refits, CSDR. There's no shortage of four-letter abbreviations in the European zone that we need to accommodate alongside this. So basically, the strong guidance, as I said, is the earlier that you can identify the changes that you need to make, most organizations will struggle to get the resourcing and the funding available in time to have everything resolved by next year. Also system dependencies, many of us are still running on quite old technology. All of these things take time. So the sooner you can do the diagnosis phase, the sooner we can move through to execution phase. Now, in terms of what execution looks like, and there's only another couple of slides before we move over to questions, but in terms of what we need to be doing, I think first of all, if you only did 3 things in terms of T+1, and this is, as I said, this is having already looked at the way that you exchange information and the kind of your error queues. In terms of actual changes to be made, first step would be moving to an auto affirmation process. The affirmation process is essentially, for me anyway, is kind of like pre-matching. Settlements, it's very, very important that ultimately that your custodian generally is actually affirming all of these trades either automatically or with your consent. But ultimately, it's very, very important that we move over to basically all trades being affirmed, because if they're not affirmed, they're not netted, and so on and so forth. And so we create again a systemic risk. The second thing is basically is in the middle office, really. You know, I think as I said, the SSI information and the ability to actually to generate clean allocations that generate clean settlement instructions. You know, using systems like alerts, CTM, these kind of platforms, for me, are a big part of the success or failure of this. That the sooner that we can all move to libraries of SSIs, libraries of information, the less variance there's going to be across the industry, and therefore the less likelihood of trade tickets being wrong. And then, as you can see, really the third point, if there are only three, is ultimately standardization of trade data. So either using fixed protocols, Swift, depending on whether it be middle office or back office, but ultimately moving away from anything that is customized towards things that are entirely market standard, so that it's not just you who's going to run smoothly, but it's also your custodian, your broker, and everything as well. Now, one of the things that we find to be very interesting is that as people prepare for T+1, there's generally three phases to people's preparation. Step one is basically is counterparties, clients and counterparties. So are your external communications, as we said, is the messaging working automatically? Is it robust? All that kind of stuff. Two is then your internal technology, which I was just talking about. But three, which is very interesting, is then your location strategy. So essentially, you know, in the knowledge of international time zone differences, what is the right way to have people basically managing allocations, confirmations, and then settlements, because it doesn't necessarily, it's not the easiest thing to have everyone in Zurich or Geneva or Lugano at 1 o'clock in the morning managing basically US settlements. What we are seeing, as you can see, what this slide really says is that you know, around basically around 10 to 15% of the European organizations that we've spoken to are actually looking at moving people, you know, basically westwards. So either to the east coast of the US or to the west coast, which is even better because you get more time zone coverage. But there is a kind of time zone arbitrage theme going on here in terms of people being able to actually to move their people around, so that ultimately, you can make this whole thing easier, because it's ostensibly easier to put somebody in to a new seat in New York or in California than it is to make them work overnight in Paris, you know, Zurich, Geneva, London, or anywhere else. So there is an interesting question that it's not just about process and platforms, it's also about people. So I think, you know, the last thing I really wanted to say before we kind of open up to questions is ultimately, you know, are we going to be ready? You know, and I think, you know, as I said, it in some ways, that for me, what's important to kind of come at this as is basically this will happen anyway. So it's not that lack of readiness is probably going to be able to actually change the outcome in terms of the implementation date. But what it can do is change how painful the implementation date is. So, you know, I think, you know, if you look, there's a surprising number of investors potentially, particularly in North America, who believe themselves to be ready today. But ultimately, what we really, really need to do is make sure that, as I said at the beginning, that first of all, anyone who doesn't know that they're going to be ready, we need to now move into that zone where people know concretely that their custodians, their brokers are able to actually make a success of your trades that you're initiating every day. The second piece then, as I said, is not only doing that theoretically, but then moving into the testing part, and then really making sure that basically by the end of this year you can say that you know, you're entirely robust and able to kind of to guarantee that actually things are working, not that they should work. So the last, actually, and my apologies for just tacking on, I said the last 3 times, but actually the other thing I just want to draw attention to is the 2 things that have really emerged very strongly as dependencies, particularly in a European context since we did this research, is securities lending and FX. So I just want to spend a quick moment talking about both of those, because ultimately, from a securities lending perspective, the real challenge on the whole of T+1 is ultimately the securities recall. So basically, where securities need to be recalled, the challenge obviously is that you know, as you're looking, for example, at settlements at 1 o'clock in the morning, you know, there is no ability to be moving securities around at the DTCC or in the Canadian depository, the CDS, because they're closed. And so the ability to actually to manage the securities, the lending recalls is a serious challenge that the industry is facing, because obviously recalls at the moment are very, very manual in nature anyway. But ultimately, as I said, it's compounded by the fact that basically the system is going to be closed overnight, and we only have one night to be able to fix this stuff. So it's an area that continues to get a lot of conversation. If you are involved in lending and borrowing of US securities, there are forums that are going on in both the RMA in the US and through the Canadian Securities Lending Association, CASLA, that I think it's really strongly, it's if you are lending and borrowing in any significant volumes, it's very much worth being part of those conversations, because I think these solutions will not come from the market infrastructures, they will come from the market. So being part of that evolution and that part of that conversation is obviously very, very key. So happy to connect you to either of those discussion forums if that can be useful. The other area that is obviously of critical importance is funding and FX. And I think as we get closer to T+1 in the US and Canada, you know, the more that actually that this whole migration is a big funding shift. So essentially, can you not only can you do your FX basically on a T+1 or T0 basis, but also obviously have you got the access to funding and credit lines to be able to actually execute those FXs, you know, without necessarily having to pre-fund. You know, obviously this maps back to the same challenge that I was saying before around basically your custodians, your brokers being ready and being able to go through the scenario planning. I think there is no single market model that seems to be emerging on the FX piece. I think a lot of the conversations are happening bilaterally based on the nature of your trades, the nature of your relationship with your custodians, with your FX brokers, so on and so forth. So I think for me, one of the key things I'd underline is you know, don't wait for anyone to publish an FX guideline, if you like. I think for me, the main thing is to reach out primarily to your custodian and to be able to actually have that conversation around scenario planning on the FX and funding leg as soon as possible. Because as I said, I think waiting for a market solution, you'll probably end up being disappointed. But I think, you know, if you break down T+1 readiness, to wrap it all up before we move over to questions, I would say the most important point, as I said, really is making sure that you're allocating on T0 in a way that's standardized and robust. Second of all, that you've had a good look at your error queues in terms of what can go wrong, what's going wrong today, rather, that you can kind of preemptively resolve using things like alerts, ETM, and those kind of engines. And third, really, as I said, is working through the securities lending and the FX processes with either your agent lenders and or your custodians and FX brokers. But I think much of what I've said is very much on. It's not going to happen. I think in most industry forums, it's going to happen actually really because you trigger it, and it's going to happen more bilaterally. So I hope that gives you some starting point of perspective. I don't know if anyone has any questions that they want to raise around this at all. Okay. Well, look, I'd probably just maybe just a couple of things I'd maybe just add in just briefly whilst anyone thinks of their questions. I think for me, you know, I think to you know, Martin's point at the beginning, you know, this is now something that is moving beyond what I've talked about so far. Is the near-term kind of pressure point, which is basically getting us ready for the US Canadian move. But ultimately, it's very, very likely that the UK will move, albeit not quickly, but ultimately that they will be making preparations to move sometime in the next 2 years. I think just as an FYI, Mexico is declaring at some point soon. I think it's very likely to declare that they will move next May as well. So ultimately, actually, the May transition next year will include 3 markets, not 2. So it'll be effectively the whole of North America. And then, as Martin said, you've got other markets looking at this, but I don't think realistically anyone past the UK is going to necessarily be moving anytime soon. But I think what it does underline is that much of what I've been talking about is more about the fundamental operating model, reaching a point of sustainability, rather than necessarily just basically just doing enough to succeed for the US. It's not really, this is not just about a single market transition. This is about, you know, all of the changes I've described, trying to do them on a broader global basis.
I think, Barney, I would just add into that statement to say it's a global phenomenon where these objectives to reduce the risk and free up capital and the points we have highlighted is moving across the globe. It's an opportunity to re-engineer an operating model that exists today versus a tactical fix to address one particular issue, US or Canada, if this is becoming the norm. And I think it would be really interesting to see if we did the same survey looking east, how the time zone works to us then when we go back rather than forward.
Yeah.
Those challenges where many of today's inherent processes are end of day batch run type of events. Now we need to condense this into one day. So I think the opportunity that this presents to look at the end to end and move away from the manual, bespoke or one-off processes you might have with your specific counterparty.
Yeah, absolutely. Yeah. Anyone who's been familiar trading China A shares for the last few years, exactly as you say, Martin, it's there's a role reversal going on here now that suddenly, you know, the world has just done that. And we've suddenly found ourselves, well, actually Europe is sandwiched in the middle on both. So any other questions at all? Anyone? Yeah. Yes. So very, very good question. Thank you, Michael. It's such an interesting one. So we actually, so the question that's come through is basically does the whole T+1 settlement relate back to a drive towards DLT as the kind of as an enabler of accelerated settlements? So I think there's a few points here. I think one is we actually did we asked this question in September last year, and basically the strong feedback was we don't have enough time. So essentially, you know, in the kind of tactical context of getting ready for May 2024, you know, there's no market in the world that could move to a DLT platform fast enough in order to be able to really provide kind of like the fundamental answer. But I think that, you know, honestly, I think that risks oversimplifying things, because I think what you've seen since then is a few really great initiatives. So first of all, on the securities lending side, and to a degree, by extension, on the collateral side, you're seeing a lot of great things around DLT. You have one source from Equilend. You obviously, on the collateral side, you have HQLAX, you have Transcend, you have WeMatch, you have quite a lot of organizations who are looking at the movement of collateral, the heavily manual processes around securities lending, and actually replacing those with the DLT technology is really great. So it is starting to present itself, but unfortunately we do have a timing mismatch that ultimately, you know, building DLT ecosystems takes an awfully long time. And, you know, it's likely that I think we will move into a T1 era with, I'd probably say, more incremental change in existing technologies, but then moving into probably a DLT kind of as a phase 2. I think one of the bridges to that, though, can easily be AI, and there's an awful lot of the custodians now looking at using AI as ways of basically simplifying simple things like reconciliation, trade matching, that kind of thing. So long answer to a short question, but I'd say that basically DLT can prove to be the answer, particularly in the high pressure areas of securities lending, but they're not the phase 1 answer, if that makes sense. The other question that's come through is how do US investment funds adapt to T1 in terms of actually, yeah, units. Basically, I'm assuming this is really, yeah, basically around liquidity management. Yeah, I think it's an interesting one ultimately. That if you, I'm just trying to break it down. I mean, ETFs are a kind of major area of concern, I suppose, from a liquidity perspective. Just given the fact that they're well, at the moment they all settle, I think, in the US on T1, and in Canada they're settling on T2. Yeah, but I think from a European perspective, you know, ultimately, basically, it is going to come down to you've got you know, another day between, for an open-ended investment vehicle, you've got another day between the subscriptions and redemptions and the security settlement that you're going to have to fund. So again, it's going to come back to, you know, as we were saying, really making sure that your existing sources of funds are able to actually to manage for that. The point though you're making around basically why is it such a concern for Asian funds, it's actually more around the mechanics of liquidity management around end of day close NAV calculations when they're doing it on a T0 basis. As we all know, it takes a while to create a NAV, to cut one, and obviously manage all the liquidity off the back of it. In Asia, they're going to have significantly less time to do that than they did before, and so it's more the Asian time zone giving extremely little time to be able to actually to do all of the work that then supports liquidity management, if that makes sense. So ultimately, from a European perspective, it basically just means you've got a bigger liquidity management challenge, I think, than you did before, and therefore your liquidity providers are going to have to help. And in Asia, the piece before that, the actual process management around cutting the NAV and getting everything ready is even more complicated and time critical, if that makes sense. Good. So I hope that's given everyone a reasonable set of views. Is there a dependency map on our side? Honestly, yeah, it's a great question. I think, you know, one of the things that so there are two things that actually this leads on to very nicely. Actually, one is that we have created now today we're launching what's called the T+1 Industry Issues Forum. What this is essentially a place where everyone around the world, we're working with industry associations of all descriptions, so AFME, DTCC, TMX, and ISITSI, a whole bunch of organizations, basically to make sure that everyone basically can log their questions and that we can help you to find the answers for them. So I think in terms of actually framing up the dependencies, I think we're at a stage now where the dependencies, there are no big, like massive dependencies like that work at a headline level other than sec lending and FX. The dependencies now are becoming much more at a micro level, depending on the nature of your investments, where you sit in the world, the asset classes, so on and so forth, your strategies. And so what I'd advise is basically please log all of your questions into the issue forum, which we can send around the URL shortly. And that's the way that we're going to be tracking and communicating where people are struggling over the next few months, so that you can see at a really micro level where the dependencies are coming across all of the rest of the market. The other thing that I would say in terms of dependencies is if you are, well, is reaching out to, if you use DTCC's Omgeo, the old Omgeo platforms, the ITP platforms, they have a benchmarking scorecard that you can ask for that basically puts your middle office processing against the market. And then the other thing is obviously your custodians will have quite a lot of information as well about settlement efficiency and things like that. So I think for me, there's three sources of information on dependencies. One is the industry issues tracker that we were running. Two is your custodian, and three would be the old Omgeo ITP business. The penalty, and one last question is will penalty rules for late US settlements stay the same after the launch? These are very, very good question. I'm hesitating just because it's a bit of a moving target, because ultimately the SEC has said that they will sanction and they have power to penalize you SEC regulated organizations, so generally speaking, your custodian and your broker, probably not you, but ultimately your service providers, if they don't comply with the 7 p.m., 9 p.m. Rules around allocations and confirmations, they haven't provided, the SEC hasn't provided any guidelines at all on what the penalties will look like, how they'll be enforced at all. But I think the main thing is that you know, because of the cost structures of the DTCC in particular, I think we worked out recently that that even if you don't get an actual penalty when your trades are failing and they have to move into the night cycle at DTCC, you're likely to, I think we were looking at, it ends up being a cost of like 10 or 20,000 for a small portfolio in terms of the cost of fails. So there are some simulations that are going on that I can share with you actually if anyone would like. But ultimately, at the moment, the SEC driven actual penalties with a capital P have not been clarified or confirmed yet. But all we know is that it's going to be more expensive for you to settle even in BAU mode without penalties. How does that sound, guys? I hope that's given you. I'm conscious there's a lot of talking, but hopefully there's some useful stuff in there. But you know, for me, the last thing I would say to wrap up is ultimately, please do use the industry issues forum that we're launching today, as it's our key way, and it's a lot of the industry associations that we're working with. It's all of our key ways of keeping an eye on the dependencies and the state of readiness over the next few months. So please do make the most of that. If you have any questions, log them. If you have any concerns, then or anything at all, then don't hesitate to reach out. And I think, as we said in the beginning, we have less than a year to make a success of this. So please don't wait to pick this up in a month's time. Let's press on as fast as we can.
Thank you very much indeed, Barney. So we finished the first phase of this, really, which is the raising the awareness, distributing the findings of being aware, and the exciting piece comes, how do you now execute against that? And that's where the industry forum that you alluded to, I think, would be really helpful to keep this dialogue flowing. Thank you all very much for your time, and as Barney said, at any time, happy to engage in any further dialogue as might seem to be fit. And thank you very much for your time.
Have a lovely afternoon. Thanks all.